Wow, thank you so much for watching these videos. I hope they're being very informative to you. I absolutely love sharing this information with you. I've been investing in real estate since 2002. I've bought and sold so many properties. It's an absolute ball. I've made money on most of them. I've lost money on others. But you know what? These principles that I'm teaching you, Mark Twain would say, experience is the best teacher, and a fool will learn by no other. I hope that you can learn by my experiences in the things that I'm sharing with you so you don't have to learn on your own. The School of Hard Knocks has a very expensive tuition rate, all right? I don't want to see you getting a whole bunch of degrees from the School of Hard Knocks. I want to see you getting them from Farlow Real Estate Experts, Jeremy Farlow, okay? That's where I want you to get your experience. I want you to save a ton of money because you know now how important it is to have a team. You know what your purpose is, how critical that is. You understand how to locate and evaluate. So now we need to figure out which one of these to do next. Like I said in the last one, based on your input, I'm going to go ahead and jump into the tax savings. All right? Wow, that's really boring. Tax savings, yay. No, it's awesome, right? It is awesome. Okay, where else, what other vehicle do we have to avoid all of these dreaded taxes? Like every time you turn around, you're getting slapped with another tax, right? Absolutely, especially in some states more than others. So the tax savings are there, the loopholes are there, because what the government wants more of, they give you tax breaks, right? So the government, by giving us some of these tax breaks in property, is basically saying, hey, we want you buying investment properties. We want you making nice homes available, nice apartments available for other people. Therefore, we're going to give you a lot of tax savings. The one that I love the most is depreciation. I'm going to put it on the second line here because I jumped ahead a little bit. Depreciation. That's pretty good for writing right-handed down there. Because I skipped over this one. In order for you to get into the depreciation, to fully take advantage of that, you have to meet a minimum requirement to determine whether you are a passive or an active investor. What's the difference, right? An active investor has to meet the qualifications, and they're out there and they're probably changing, so I'm not going to necessarily address that right now, where you are engaged in the activity of managing that property, right? So that is a great question for the person on your team named SIPA, okay? Otherwise known as CPA, right? Talk to your SIPA to find out what it is that you've got to do to make sure that you qualify as an active investor, right? Because that's where you're going to see the tax advantages that you're going to get. Depreciation is a big deal. I really need to add, sorry I keep putting my back to you. I'll just smile, hey, how's it going? All right, depreciation, what you need to be looking at, I was trying to be so funny, I totally forgot. Don't worry, it will come to me. But depreciation, you need to look at segregation. Segregation. And there are some other fancier words that are out there to describe segregation, but there are a bunch of different depreciation schedules. Did you know that you can't depreciate land? It is what it is, like it's dirt. It doesn't go down in value. Because that's really what depreciation is saying. It's taking things into account, saying the refrigerator has a useful life of X, right? And I believe refrigerators have a useful life of 5 years. Okay, if it's really 7, or if it's really 3.5, sorry. Okay, but depreciation of certain things have a very short life. And so if you've got $1,000 of an item and it's depreciable over 5 years, guess what? That's $200 of loss that you experience every year that you haven't actually really experienced? I don't know. For some of you, like, that's easy, you get it. But for some of you, even through this little lens, I can see your blank stares, okay? Depreciation, you really need to understand this. This is awesome. When you understand this, this is awesome. So let's say you've got a $100,000 property. Let's say half of it goes to dirt. 50,000 goes to dirt. The other half of it, and this is not possible, but let's just say the other half of it could be depreciated over 10 years, because 50 divided by 10 is really easy numbers. So that would mean you can show a loss on your tax return of $5,000. 50,000, 50 divided by 10 equals 5, right? Okay, so you got 50,000 over 10 years. Every year you get $5,000 loss. How much money are you making on that property? What if you're only making $5,000 a year, right? If you're making $400 a month in income, net income, that's $4,800, and you've got a $5,000 loss. The government allows you to take that loss, that $4,800, that $400 a month extra that you're making every month, counts as 0 for taxes. You don't have to pay any of your payroll taxes on it, and you don't have to pay any of your state or your federal taxes because you didn't make money. Isn't that cool? That is so awesome. But what's the catch, right? When you sell the property, huge problem. You've got to recapture all of that. So you're 5 years down the road, 5 years at 5,000. You've been claiming this 5,000 every year, 5 years. So you have lost $25,000 in this example, lost it. But you haven't really, okay, we're talking about depreciation, but you've lost it. When you go to sell this $100,000 property, you have to throw that 25 back into it. Okay? You know what's really important at this point? Get a good SIPA. You need a SIPA, a good CPA. Man, the one I've got has saved me so much money over the years, not only here, but in many, many other ways. Did you know, though, that there is a way to never have to recapture it? Ever? Yes! I don't know why I don't have a dash here, okay? But I'm going to add a dash. Have you ever heard anyone talk about a 1031 exchange before? It's amazing, a 1031 exchange, because all that depreciation, now your $100,000 property, you've depreciated it all away. Remember, the dirt's still there, but you depreciated everything that you could. You can then sell it for as much as you want. Let's say the $100,000 property is now worth $200,000. How much did you make? $100,000, okay? Now, and you've depreciated out 50, so you would have to pay taxes on the 100 plus the 50, which is 150,000 you'd pay taxes on at whatever the capitalization rate is, et cetera, right? To avoid that, you can do a 1031 exchange. You buy a property that's equal to or bigger than what you're sold the other one for. Best part is, again, talk to your SIPA, best part is you can take one $200,000 property and you can buy two $100,000 properties. There's a ton of rules that's involved in a 1031 exchange. A ton, right? That's beyond the scope of what we're going to be talking about right now. Get a hold of your SIPA. Your realtor can help you a little bit, but your SIPA is really the one who can help you the most. Your CPA there, your tax accountant with the 1031 exchange and what that looks like. Isn't that cool? Right? You can just buy another one. So now that $50,000 that you have lost, right, that you haven't had to pay taxes on, you can take that full 50 and you can use it toward the purchase of another one. The full 50, right? Where if you had to pay taxes, normal 50, you would only have like 25 or 30 left, right? And the buying power of 25 or 30 is small compared to 50. And then when you start adding zeros as you become a bigger and bigger investor, woohoo, right? Now, you get ready to sell those properties that you flipped into using the 1031 exchange. All of that capital gains has to be recaptured, and now you've got to pay taxes on it, right? Yes, if you sell it. But you could roll it into another one, or upon your death, it resets. So all of that depreciation is reset. So when you pass it on to your heirs or whomever, they don't have to pay taxes on it. So that is an amazing tax savings plan. And if for any other reason you're looking at real estate investing, income producing is awesome, right? Buy that 4-unit apartment building we talked about, generate $1,000 a month, go buy your Mercedes, right? You can do that, but look at how awesome this stuff is that's going on behind the scenes. It's amazing, right? Okay, you need to do this. Are you seeing that now? Okay, we've talked about how important your team is, your purpose, how to locate and evaluate the tax savings. We're going to be getting into financing. Oh my goodness, I love the financing side. That is exciting stuff when we talk about it in a minute. And then, of course, management. So keep watching these. Maybe you're not watching them as they're getting released and you're just like powering down through them. And that's fine too. But I love this stuff. I love this stuff. And I hope it's awesome for you, and I hope you really enjoy the things that you're learning and that you pull the trigger. None of this means anything until you start. So don't hesitate, don't wait. Give me a call, give your realtor a call, and get started today. All right? I'll be back. We got 2 more things to go over. I'll be back soon.